Good afternoon, everyone. Welcome to this webinar. This is Shelley here, and then welcome to join our webinar today on building smarter KYC with Dotless Proof of Address. So let me introduce myself. My name is Shelley Liang, who is the co-chair of the RegTech Committee of the FinTech Association of Hong Kong. So today we're here to discuss a truly transformative topic that has the potential to revolutionize on how we approach KYC process across various industries. So traditional proof of address verification has long been a significant hurdle, creating numerous pain points for both business and customer. So it is not hard to imagine that we have problem about lengthy onboarding times, high operational costs that due to manual verification, and the persistent challenge of detecting sophisticated fraud attempts when the documents can be easily manipulated or even being a very high quality forged document today. So these issues are combined by the scalability problems and the sheer variability of global document standard, which can also lead to a frustrating customer drop-off rate and delays, particularly in a fast-paced sector like online gaming, fintech, or even stablecoin or the crypto business. So today we would want to explore how Dotless Proof of Address can act as a true game changer, addressing these critical pain points and paving the way for a more effective, secure, and a user-friendly KYC landscape. So for the next hours, we will be hearing from our prestige panelists on their view around this topic. So before we start the panel discussions, may I ask our panelists to quickly introduce themselves? Maybe Amara, you start first.
Good evening, everyone. My name is Zamara Mukhtar. I'm working as a regional vice president at Shofty. At Shofty, we work with the banks, fintechs, crypto exchanges, payment providers, and digital business globally, helping them to solve onboarding, fraud prevention, and compliance challenges at scale.
Thank you, Amara. And next, Nisha.
Hello, everyone. My name is Nisha. I work as the Global Head of Onboarding at Aspire. Aspire is basically focused on serving startups and SMEs and help them. And my role is basically focused on making their onboarding journey easy. So excited to be here.
Thank you, Nisha. Okay, so Apal, which is also our RegTech co-chair. So over to you, Apal.
Thank you, Shirley. So, hi guys. So, first, my name is Utpal Patel. As Shirley mentioned, I'm the her co-chair on the RegTech committee. I'm also a partner at EY, focusing on financial crime and risk consulting. So, to start the session, we'll be talking about regulation and in terms of what's the regulatory direction in terms of the use of address and proof of address. Now, as well as address and other areas in financial crime, a risk-based approach is one that's always discussed and talked about. And what we're seeing more nowadays is a greater emphasis on risk-based approach. So across APAC jurisdictions, the general direction is fairly consistent. So we're moving away from prescribed checklists, so just sending in a utility bill, some address verification, towards a risk-based approach. So what do we mean by risk-based approach? You still are expected to obtain a residential address, but how you verify it is increasingly left to the firm, providing it's defensible. So, for example, if you're onboarding a low-risk domestic customer on a cap product, a regulator is unlikely to insist on a specific document. Whereas if you're onboarding a high-risk cross-border client in, say, the wealth management space, expectations naturally shift regardless of jurisdiction. Now, in Hong Kong specifically, what we often see isn't a regulatory constraint, it's what we would call a policy lag internally. The second line tends to hold on to documentary requirements even after regulatory flexibility has increased, largely for audit defensibility and also due to lack of training. So you often see that policy has been defined to enable a risk-based approach to use less sort of stringent requirements for document requirements, whereas operations will still execute in a similar way. So it's on a formulatic sort of basis. Now, when we look at sort of latest trends, at the same time as the ability to use a risk-based approach, regulators such as the SFC have been quite clear recently, and the focus is on whether, not whether you use documents, but whether you can detect and respond to the fraudulent nature of documents or question documents properly. So in the latest SFC guidance paper that came out this weekend, there were some findings in terms of documents used with inconsistencies in sort of the fonts, the alignment, the layouts, conflicting data within the same documents, the same information used for multiple clients for onboarding. So while expectations are less in collecting documents, they're still relied on in terms of identifying anomalies and escalating properly anything that you identify, and making sure that you audit evidence of the checks performed. So in some ways, it raises the bar of documentation sort of validity. But at the same time, documents are no longer seen as inherently reliable evidence, but they need to be validated. Now, in terms of proof of address observations, proof of address is a good example of how this shift is taking place. So historically, it was seen as a straightforward control. Submit a utility bill, check the name and address. But in practice today, utility bills are often low integrity documents, easy to fabricate or modify. Even genuine documents are hard to process reliably. So the layout, language, format differences, and especially with AI nowadays, you can create really amazing sort of versions of fraudulent documents. Two genuine customers can submit two valid utility bills, and one passes and one fails purely due to the formatting differences. Now, in APAC, as well as the ability for fraudulent documents and the issue related to it, there are some data layer shifts as well. In some markets, the challenge is not the document itself, but the underlying data layer. Vietnam is a good example. Administrative restructuring changed how addresses are structured entirely. So a valid ID can now fail validation, not because the customer is wrong, but because your system is checking against an outdated address model. So overall, regulators are either allowing more flexibility in verification methods based on a risk-based approach, or changing the underlying data environment. In both cases, this document-driven approaches tend not to hold for long.
Thank you, Appel. So we now heard from you that there is no one-size-fits-all anticipation that is coming from the regulatory landscape, and it appears to me that different jurisdiction is having different type of expectation, and even it differs among the different customer sector. So may I turn to Amara? In your view, how does or where does the address verification actually break today, and how Shifty is actually solving all this problem with your technology or your solution?
Yeah, that's a really important question, Shelly, because this is exactly where many are actually onboarding teams are struggling today. I think the first thing we need to acknowledge is this, that most firms assumes that address verification is a compliance problem. In reality, it has become a data and document processing problem. So across the APAC, the documents arrived in different languages, scripts, layout, formats, and quality levels. And many onboarding systems still rely on the rigid OCR templates built market by market. So what happens? So the moment something slightly unexpected appears, it could be a regional utility provider, a mixed language document, or apart from this, what we have observed that then there is a multi-address problem, which sounds simple but creates enormous operational pain. One page can contain the customer address, the issuer's address, and sometimes a branch address. So 3 addresses on one single document. And what happened that basic OCR extracts the wrong one, and a genuine customer gets rejected, even though the correct information was sitting on the document the entire time. And thirdly, then there is another issue is the document fraud. We are no longer just dealing with edited PDFs. Our own platform
Apologies, we seem to have a lag here.
Yeah, I think there's a connectivity issue. So Amara, would you mind dialing again? Because we are hearing a little bit breaking here.
Or maybe try with your video off to see if that's better.
Yep.
I'm
Amara,
sorry that.
can you turn your
Yeah.
video up and maybe carry on? I think that might be better. I think there's just some connectivity lag.
Yeah, I'm not sure that. I'm sorry. Apologies for that. So I will say that. Okay. So
I think we sort of lost you around the how OCR is going to help with solving the problem. So I think you're lagging again. Maybe you really want to turn off your video.
So actually, across APAC, the document arrives. So and many onboarding systems still rely on the rigid OCR templates built market by market. So the moment something slightly unexpected appears, it could be a regional utility provider.
Sorry, I think we are losing you again.
Multi-address problem.
Amara, can you try turning off your
Which sounds
video?
simple, but creates enormous customer address. The issuer address here accepts the wrong one, and a genuine customer gets rejected. And the reality is that even though the correct information was sitting on the document the entire time, then the another issue that we see is the document fraud. We're no longer just dealing with the edited PDFs. Our own platform data shows that AI generated document now trigger 31% of the Shafti high risk alerts as of the Q1 this year. And what's happening across the industry, proof of address fraud attempts rose 18% Y-on-Y in H1 2025, with synthetic addresses accounting for approximately 42% of
Sorry, Amara, we are losing you again. Upal, you have the same problem, isn't it? I'm just want to make sure this is
that's
not my own
correct.
problem.
Yes. Yeah.
Yeah.
Okay, maybe it's good for me to move on while we are waiting for Amara to come back. So actually, I wanted to turn to Nisha because Amara sort of share what Shifty can do today in terms of OCR on dealing with even fraudulent documents. So Nisha, I think Singapore is one of the cleanest regulatory pictures in APAC right now. So what does MAI actually accept for address verification, and what does that mean for operator like Aspire? What does Aspire's address verification doing today for our SME onboarding in Singapore? Can you share with us?
Yeah, thanks for the question, and very interesting points from Utpal and Amara, right? So yes, Singapore, I would say in terms of onboarding a customer is one of the easiest and cleanest landscapes today. MAS, because MAS and the Singapore government as such mandates that, the NRIC or the FIN information has to be updated with the government within 3 months. We get like 95% of the address verification can happen directly through a MyInfo or a SingPass login. And those addresses are typically correct and up to date. Yes, one would argue that we still see 2 to 3% cases where people are not complying to this, but it is in Singapore still very rare and acceptable. But when you're onboarding an SME, the address verification does not limit to people who are just located in Singapore. You could have shareholders who are located in other parts of the world, right, where you do not have a digitized system in place. And for those cases, we still rely on some of the traditional documentary evidence that Utpal mentioned earlier, like a utility bill or a lease agreement. And the problems that Amara mentioned, that some of these have, like a bank statement, that some of these have 2 or 3 different addresses. These are some of the typical issues that we see when we are verifying these addresses, when we are trying to make sure that we have the valid proof of address. So when it comes to Aspire, if we have a shareholder, or if you're doing a address verification of someone located in Singapore, we still rely a lot on SingPass or the national registries. But when it comes to some of the other geographies where the national registries are not as up to date, yes, there is a documentary verification process involved. So that's how we deal with it right now.
Okay, thank you. I'm actually seeing there's a very valid question that is coming in through our Q&A section, and I wanted to address that. So our audience, Kenneth, is asking a fundamental question on why address verification is still important today, while most of the activities actually happens online, and people tend to move frequently rather than staying in the same address for a long time. So, Nisha, do you have any experience for your clients to be as mobile like this? And how are you going to address this?
This is a very interesting question, and this is a question we get a lot of times from our clients as well, right? Especially when it comes from like a partnerships channel, that why is address verification important? Or, there are some countries like China, for example, where everything has moved to digital and many people don't have a document-based verification. So why is this important? But I think it's important despite the global mobility, people tend to move because we are in a regulated sector, and we still have to make sure that the money movement is not happening through like a sanctioned country. We need to know where the key stakeholders or shareholders are situated, and who is the ultimate beneficiary when it comes to an entity onboarding. So I wouldn't say that address verification is not important anymore. But yeah, I would love to hear Utpal's view from a regulatory standpoint, like what he thinks about this, right? I think it makes sense, but yeah.
Yeah,
No,
in fact, the
it
next
does
one
make
that I'm
sense.
going to turn to is Upal. So
No,
over to you again.
it definitely does make sense. One of the key features of address verification will be geography. So as you mentioned, it's not just sanctions, but also from a risk perspective. So your typical customer risk assessment model will look at things like your channel, your product type, your customer type, and geography as well. So people from a high risk geography, so that could be where there's high bribery and corruption, there's about tax transparency, low money laundering controls as well. They would typically be higher risk. So that's one reason why it's important. The other thing is to identify networks as well. So when you start thinking about criminal activity, it's typically there's relations. So you are monitoring not just an individual, but anybody who's related activity or related to them as well. And a lot of that linkage would be done through things like addresses. It could be a residential address, it could be a work address, and there's other factors as well. So you can use things like email, telephone number, but address is a very good identifier in terms of who you are, where you're based, and also what your other relations are as well.
Yeah, fair enough. And I actually wanted to chip in a little bit in terms of the bank's perspective. So like what Upal has just mentioned, that address proof is definitely not the most important thing, but it is something that we cannot miss in terms of ensuring that the customer itself is a legit customer. How they operate business, particularly for the corporate customer, how they operate business. Do they have a permanent address, which is also important to us because this is a key indicators in terms of their business mode. So this is basically what we are looking. So I wanted to move on to the next block of question, which is around the decision framework. So we spoke about there are scenarios that we can decide to go with dogless. There are scenarios that we can stick with the paper documentation. So, Upal, can you share with us if there is any best practice or decision framework that can help the audience here to decide what decision to make and when is the best timing that they can decide to drop the document?
Sure. Yeah, we can talk about that, Shirley. So I think first, you stated it correctly. So rather than asking, do I need the documents? We're asking the questions, is dogless versus documents, where, is the document adding any value and when it does or when it does not. So let's have a think about why you would need that document and in what circumstances you might accept, a little bit more risk. So there are typically 5 variables when we're thinking about if we need documents or not documents. So the first we talked about a little bit product risk. So high risk products. So, if there's cross-border activity, if there's more cash involved, if there's high risk sort of activities, so it could be things like trades, finance, or brokerage, then you would expect sort of higher threshold. Whereas if it's more of a simpler product, say retail, low threshold or fixed amount, prepaid card sort of products, then there are less thresholds in terms of the validity of or verifying the address. You also look at customer risk. So there are obviously certain customers who we consider high risk, just from an AML perspective. An easy example of that would be, say, PEPs, or you could have customers from high risk geographies, which we talked about as well. And there's different types of occupation and industry codes as well related to the customer we might find high risk. Then we can talk about transaction limits. So are there any limits in terms of the products that they're using? Is it a low balance limit? So is it a simple insurance product, for example, life insurance, health insurance, where the funds are limited, or is it unlimited transfers? So they can be multiple amounts of transfers for large amounts to multiple counterparties. The data availability is another factor to consider as well. So DocList only really works where data exists. So, for example, there's a national ID system and a strong coverage for residents. So in Hong Kong, this would be IamSmart. So IamSmart is being used by a number of banks for address verification. It's predominantly used for ID&V at this moment in time, but there are, banks are using it for address verification, and it will expand in terms of its use case, as it becomes more accepted within, the Hong Kong environment. For non-residents, there are some gaps, and the document is a fallback. So documents would be required there for address verification. And finally, we think about audit defensibility. So arguably the most important in practice. So many firms keep documents not because regulators require them, because they can't yet evidence the alternative clearly. So how do you evidence that you've collected address information if you haven't got a physical document to validate this? Now, with newer technologies, this may change. So with the use of things like, blockchains, you'll be able to verify that you received information, and there'll be a permanent audit trail. But at this moment in time, we still need that physical document.
Thank you, Upal. So Amara, I wanted to turn back to you because you are the solution provider. Then you probably will see a very wide spectrum in terms of customer. Can you share with us what is your experience with them? Which sectors that you see can go for DocList, and which sectors have to be more conservative, and why is the case?
So, Shirley, the first thing is that actually we think we tend to begin with the wrong question in this phase. Is that the question is not, can we, remove the document? The better question is, what risk variable still requires the document to exist? And then we can decide which industry is based on that. So because if the product risk is low, customer risk is manageable, transaction limits are controlled, digital identity coverage exists, and the last thing that we should consider, the CN is operationally defensible, then the customer is probably a strong DocList candidate. But if one variable changes, like cross-border onboarding, EDD exposure, high-value financial products, limited data coverage, then the document earns its place again. And consider this context, like the average onboarding abandon rate sits at 34% in 2026. That's 1 in 3 customers walking away before they have even opened an account. So every unnecessary document is contributed to that number. So the first thing we need to see that the future is not fully documentless, and it's not fully the document based either. The future is orchestration. So dynamic flows that intelligently decide when the data layer is enough and when the stronger document evidence is genuinely necessary. Then we can decide which industry. So I believe that the industries which are high risk, they should opt for the document base. And also we need to see that if we have identity signals, behavioral signals, or policy evidence, those signals are explainable. So this is like, we cannot say that it depends on multiple things. If the user is coming for the low risk industry, like online platforms, or buy now, pay later, they can opt for the dogleg. But it depends on the coverage and other risk signals. Yeah.
Okay, thank you, Amara. So we are hearing from you that it is not really the mode that we are going to choose from. We are actually going to orchestrate them by looking through all the 5 risks that we have talked about, or the panel has actually talked about. So again, this 5 risks is the product risk, customer risk, transaction limits, data availability, and audit defensibility. So in a non-regulated industry, these 5 variables can shift weight. Fraud and conversion dominant, and audit defensibility is sometimes questionable. And I know that compliance has been quite notorious in terms of not willing to sign off or by dropping off a document, even though the regulators allow it. How do the other firms get internal alignment? Maybe I wanted to turn to Apal to share with us in terms of what we have been seeing, and then next we can go to Nisha.
Sure. So with anything like this, when we're changing sort of policy procedures, now especially when you're lowering, I would say, requirements in some areas, typically what works best would be something like a control pilot, not a policy debate. So I'll pick one segment where risk is low, data coverage is strong, and document the decision clearly. And it's also helpful to frame against recent supervisory focus on forged documents. Keeping weak documents is not necessarily the low risk option. There's other things to consider as well in terms of how you roll this out. So one of the things would be, what is the impact to the analyst's sort of pay and remuneration? So in many organizations, the quality findings are linked to maybe their year-end bonus. So if they get a number of findings because of the breaches of policy, then they may find themselves, losing out on their bonus payments. So what we do recommend as well is to take this into consideration. So if you're rolling out something new for these analysts, be a little bit, I would say, less stringent in terms of their, how these quality failures related to this area would impact their year-end score.
Right. So Nisha, do you happen to experience something that is similar when you try to onboard a customer and then your compliance team hold a very different views? Do you happen to have that?
Like all the time, right? I think, and as someone who's a part of the onboarding operations team, who is like operationalizing, I think we are all the time like sandwiched between the compliance team and the commercial team. One who wants everything to be perfect versus one who wants the customers to be onboarded as soon as possible. So I think that's my daily. And I actually agree with a lot of points that Utpal mentioned, right? So whenever we are trying to operationalize a change, a regulatory change, or even an automation which would help in faster customer onboarding, it always starts with a control pilot. So it could be an A/B testing, it could be a small sector of customers whose onboarding journey otherwise is quite easy. So we add a little bit friction and see how that impacts our conversion rates, what are the drop-offs looking like, and analyst bonuses depending on policy breaches or any other failures. These are some of the controls that we have in place. And I think along with that, it's also a question of the risk appetite that any company would like to accept, right? And that, I think, kind of directly relates to the kind of customers that you're supporting. So if you are supporting a small company, which is a startup, the chances of having difficulty in collecting all the documents are higher than compared to like a bigger company who would already have set processes. So I think these things also depend on who are your customers and what is the risk acceptance that the individual company has, along with how do you control it internally through pilots, through A/B testing, through quality control metrics and product interventions wherever possible.
Yeah, I have to agree with you because I myself also works in compliance. So we are also assessing different scenarios on a case-by-case basis. And then the key discussions that we are having on a daily basis is like how much risk that we wanted to take, how much risk that we wanted to accept for this particular case in order for it to get through. So yes, I
guess
totally
Shirley,
agree with you.
before we move on, I think the interesting point will be what's happening in Singapore today with the MAS's
Right.
recent announcements on speeding up the onboarding for PBs. So this is not going to be a decision by the banks itself. This is a regulator coming out and saying they will have a target for 6 weeks. So this is where I guess organizations would truly be tested in terms of will they be able to turn this new policy and operationalize it the way the regulator expects. Have you had these discussions already? I guess, Shirley, from a DBS perspective, and Nisha, in terms of how you're going to do this. I know it only came out literally last night, so it's fresh in my mind at least anyway.
I have to be very honest with you that we are still struggling with the circulars that has been issued by SFC over the weekend in terms of the account opening for the mainland Chinese customers. And this one is also being followed by HKMA circular that asking us to conduct additional measures for the new account opening for the mainland customer. So we are working very hard on that. So the PB requirement probably is something that we will be looking at next. Okay, I also wanted to address the questions to Amara because Nisha has actually mentioned about at the address verification step specifically, how do you see firms is balancing friction, fraud, and pass rate? So we mentioned about like compliance having different view, and then the operation team is having different view. Compliance will be taking a risk-based approach to decide whether they are going to accept a certain risk. But from a solution provider perspective, do you have any things that you can share with us on how your customers or your clients is doing, is making decision on this today?
So you are absolutely right, really, that that Nisha pointed out the 3 core points that's very important. That address verification is where fraud prevention, compliance, and conveyance all collide. So what we see across client is that the clearest, the trade-off comes from using a risk-based approach instead of forcing the same document-heavy flow on every user. So low-risk users often pass through the lighter or dockless verification methods, improving conveyance without materially increased fraud. Fraud usually increases when firms remove the address verification entirely without alternative risk signals like device intelligence, geolocation, or behavioral checks. In APEX, especially, many pass rates issues are operational rather than fraud related. Unspotted documents, language limitations, or user lacking the traditional proof of address. So, in short, the strongest results typically come from an adaptive verification flow that combine localization, layered risk signals, and most importantly, market-specific onboarding strategies.
Right. Okay. Thank you, Amara. So this is probably going to be the last questions that I'm going to ask the panelists. So Apar has mentioned about the address data layers are moving faster than ever. So how quickly you think firms can actually update their address verification logic? And how do you sequence all these updates without breaking the live flow? I actually want each of you to try to take a try on these questions. Maybe to you, Apar, first.
Okay, so I'd normally recommend, usually recommend a risk-based prioritization. So implement or fix where the customer impact is highest, failure rates are highest, and regulatory exposure is the clearest. And so this could be something along the lines of, where you want to speed up the onboarding process or where there's mass amounts. So it could be one or the other, right? So it could be retail, it could be high net worth. So where failure rates are the highest, where it's the hardest to get that information from them. And the regulatory exposure, like I mentioned there, is very clear in terms of what the expectations are. So with something like IAMSmart, which we have in Hong Kong, we do have banks using it for address verification. We have it using it for ID&V as well. And the success rates are very good. We had an incident, actually an MPF breach recently as well in Hong Kong, if you remember. And the regulator as well is sort of encouraging the use of IAMSmart to log in as well. So I would encourage organizations to use as much as you can. And now as it becomes more, I would say, normal to use in Hong Kong, I would expect that it's being used for banking across the board. And I think Shirley, you were mentioning earlier as well that your firm itself is using it in a number of sort of PLCs. But when
Correct.
you will use it, you will use it. Actually, I'm speaking your words, right, Hannah? So
Yep.
do you want to carry on in terms of how do you plan to use it?
Yes, we are actually because I am smart is something that has been pushed out by the government, and we find this extremely useful, particularly for the corporate customers that normally will come with a complex multiple kind of corporate structure. Currently, what we can do is really to look up the business registration in terms of in order to understand the UBO structure. So hopefully with I Am Smart, it is going to be a little bit more authenticated channel for us to be able to get down to the bottom on doing our either client onboarding, I mean account customer onboarding or the periodical KYC CDD. So we are now at the stage of sandbox. If everything goes right, then probably we don't really have a timeline in terms of when we are going to adopt that. But when it becomes comfortable for us to roll out, then it will definitely be one of the things that we are going to use. So Nisha, I wanted to head over to you in terms of the data layers that we are just talking about. So how Aspire is doing it today, like how you're getting all this information. So now bank is looking at authenticated solution or the more official solution that is coming, say for example, I Am Smart. And in Singapore, I understand that you also have something that is official that is coming from MAS and also the government. So is that something that you can share with us?
Yeah, so for Singapore, we do use the COPPA solution that MAS offers. And surely 100% agree, right? Like for clients that have a very complex structure where, there are layers of corporate shareholders where, you have to drill down to find who the two-legged individual who is benefiting out of the company. Where is he located and how? I think COPPAS is a great solution for that. So we are using the COPPA solution for a majority of our cases or clients that come in Singapore. For Hong Kong, a lot of this is still physical document based, though we do rely on a lot of government registries, right? Like we rely on ICRIS. I Am Smart, as you mentioned, it is on our pipeline. We have not started using it, but it is something which we do plan to implement in the future. But we do rely on ICRIS to get the latest registry documents. But it is a more, I would say, doc heavy process. While in Singapore, we have been able to go into the dockless process as much as possible, given some of the more mature systems like COPPAS and SingPass that exist.
Right. Thank you, Nisha. Okay. Amara, may I ask you to do a summary in terms of what you think Dockless Address Pools is doing today, how innovative that it could be as tomorrow as a closing remark for today's panel session?
Yes, sure. Actually, so address verification is not just a compliance step. It's now directly embeds the conveyor, fraud exposure, operational cost, and audit readiness. So, of course, for the enhanced user experience, the dockless has great value. But again, that we need to see that which dockless way we are using, either passive, active, or biometrics spotted as well. So if these elements along with the fraud signals are added, I think that could solve a huge issue of balancing between the compliance and the customer experience and conveyor rates. But again, the reality is that we cannot rely 100% on the dockless. The reason is that the coverage of the databases, as well as that high risk customers or those who are doing the high value transactions, we need to have a fallback system. So though I would say that future is not completely dockless or completely document based. It's a hybrid approach.
Thank you so much. So we running a little bit early today. So I actually wanted to give the airtime back to the floor to see if there is any attendees who wanted to ask any questions to the panelists. Don't be shy. Anyone? Okay, then if we don't have any open questions, then let me thanks again to our panelists for your valuable time today on sharing us how Douglas address pool is changing the game in terms of the KYC CDD. Thank you very much, Amara, Upal, and also Nisha. Thank you.
Thank you, everybody.
Thank you.